Hey guys, how's everyone doing? Today I want to talk about the work of Larry Connors and hopefully try to answer one question that generally comes up in our mind. I'll give you an instance. So let's say you get a very big, large red candle, something like a 2, 3, 4, 5% candle. So you generally get confused. Are you supposed to continue on the downside, trading on the downside, or do you start to plan for a reversal because that's a very big, unusually large candle? So hopefully, the work of Larry Connors will help us to build up on that problem and help us in our trading going forward. So what I would like to do is I would like to start with Larry Connors' work on counter trend trading based on market breadth. And then using those concepts, I would like to talk about what Larry Connors uses when he trades wide range bars, something which is unusually large. Before I start, I want to apologize because today I'm not using my usual equipment. I forgot my laptop back at home in Amritsar. Currently, I'm in Mumbai and I'm just borrowing one of my friend's a laptop. So, Jatin, if you're seeing this, thanks a lot for helping me out with this. Let me start, guys. First of all, let's talk about counter trend day trading by Larry Connors. Larry Connors talked about used market breadth for trading against the trend. He said that if you can use market breadth as an indication to trade against the trend, that is very, very useful. I'll give you his exact wordings. He, of course, used this on the American markets, but you are welcome to try to observe this in the Indian markets first. And if it does give you merit, then you can always start to trade on this. Start trading on this for small quantity. And then over the course of time, if you're getting consistent results, you can always increase your or size on those trades. Of course, have a well-defined risk aspect to it as well. So what is market breadth? Let me first open up the page that I want to talk about right now. What is market breadth? See, market breadth is, I would, in very simple terms, it tells you about the health of the market. We look at the advancing issues, we look at the declining issues, we look at the unchanged issues that have not changed during the day. We also look at 52-week highs, 52-week lows. We look at the advancing volume, declining volume, and all of that stuff. I will surely talk about this in detail later, but that is not my motive to talk in detail about the market breadth. But just building up on what Larry Connors said back in 2005, he said that we can use the advance to decline ratio. What is advance decline ratio? See, advance decline ratio is number of advancing issues divided by number of declining issues. So, for example, if you're watching this in India and you go on the, let's say, a money control website, every day on the application or on the website, you can see how many issues today were advancing. Advancing means that they were trading in green, for example. How many issues today are trading in red that are they are declining? So advances divided by declining gives you the advance decline ratio. For the purpose of advanced decline ratio, you ignore the unchanged issue. So, for example, if a issue has not changed, it's not going up, it's not going down, it's trading at the same value as of yesterday. So we ignore that from our advanced decline ratio. So what Larry Connors said is, if the advanced decline ratio is too extreme, so for example, the advances to decline is greater than 2.0, that's an indication to go short. He said that if the advanced decline ratio is less than zero point 0.5, that's an indication to go long. So what he is trying to convey is, so for example, if you look at a momentum indicator like RSI or stochastic, this is kind of giving you an overbought or an oversold market. If the advanced decline ratio is greater than 2, matlab everything is up, 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 up. That's a very rare phenomenon. In any kind of market, you will have some issues down, you will have some issues up. The ratio will be somewhat, neutralish or less skewed to the positive, but massive positive, something like a 85, 90 on RSI. That's an indication ki yaar, if you are getting some sort of a cluster of evidence, look for a short opportunity. See, again, I'm telling you, I am not suggesting you do this. I am only trying to use this basics of this to use in a concept I will teach you later. So just kind of understand what he is trying to convey, and then we will come to the main concept in like about 5 minutes. He also said that when the ratio is less than 0.5, so something like when things are getting too oversold, you can use like if you get some kind of a confirmation or a convergence with other indicators. So, for example, your advanced decline is less than 0.5. At the same time, you are getting a very important support level on the chart. Some Western indicators like maybe RSI or a stochastic, maybe Bollinger Band is giving you a buy signal. So when you're getting a cluster of evidence with an oversold or a massively negatively skewed advanced decline, you can use that to go long. And then you can exit the trade after 5 days unless a reversal signal occurs. So this is what he started discussing. And it's a well documented thing because Larry Connors has been in the market for a very long, long time. And one of the great people you should look out for if you want to learn technical analysis. So this is what he started building the idea upon. If I go a little bit forward, he started talking about another very interesting concept, which you can obviously also build up in your Indian markets or any other market that you're trading. He said that equities have a tendency to be mean reverting. Mean reversion matlab ho gaya, for example, let's say 20 moving average, right? That's a central tendency, that's a mean. If, example de raha hu, if your stock price or your index, whatever, is moving very far away from the 20 moving average, which is considered to be the mean, so stocks will have a tendency when it has deviated too much away from the mean to come back to the mean because जो मीन है या मूविंग एवरेज है स्टॉक का दैट्स द सेंटर ऑफ द प्राइस मूवमेंट सो अगर प्राइस मूव कर रहा है फ्रॉम पॉइंट ए टू पॉइंट बी it will not move in a straight line, it will oscillate up and down, up and about the moving average. So tendency of a stock to return back to its moving average is called uh, deviation from the mean reversion कहते हैं इसको. So he said that equities have a tendency to be mean reverting because a lot of noise is there in this market. Something like an interest rate is very less noisy. Equities are considered most noisy. And this is also very true for market breadth. What Larry Connors in 2003 talked about the ideas I showed you abhi thoda se pehle. And then in 2005, he talked about that if you look at declining stocks, that can be very excellent leading indicators for a stock market advance. Don't look at stock market advances. But if you look at आपका declining issues क्या कर रहे हैं, that can give you a leading indicator of what can happen in the future. This is what Larry Connor said. He gave us three scenarios, obviously in NYSE, NASDAQ, and in NYSE, three scenarios. He said if you look at this, you can kind of understand what's going to happen in the next week. So if you look at and use the declining issues as a leading indicator, you can have a good understanding of what is going to happen in the next week. Now, this is very useful for someone who's an option seller because, for example, ये scenarios पढ़ते हैं, then आप समझ जाओगे. He said that if declining NYSE stocks, your exchange के stocks है, if the stocks listed in NYSE, the declining NYSE stocks are greater than the advancing stocks for at least 3 days. So आपके पास any day, when you look at the newspapers or when you look at these websites now, everything is well documented, whether it's advancing volume, declining volume, 52-week high, lows, advancing stocks every day, declining stock every day. So he said that if number of declining stocks hai, they are greater for 3 consecutive days in a row or for the advancing stocks, then the S&P 500 averaged a gain of 0.50% the following week. Now you will think, yeah, तो बहुत छोटा gain है, right? But think about it from again, these are probabilities. मतलब in technical analysis, nothing is sure, nothing is confirmation. But there is high degree of confidence. So if you know कि यार very high probability that अगर in 3 consecutive days you have declining stocks much more than the advancing stocks, then high chance होगा for the S&P 500 to give you a net gain of 0.50%. Now, you might say it's less, but think about it from an option selling perspective. If you know the market has a very high probability not to go down, you can go and sell puts and make 4-5% in that week very easily, or with much more ease than the other day. So again, the what you can do with this information is up to you. Second, if the declining NASDAQ stocks are greater than the advancing NASDAQ stocks for at least 2 days in a row, then the NASDAQ gave a gain of 0.80%. Why this is more than S&P? Because obviously Nasdaq के अंदर क्या है, 75% of weightage is with your telecommunication and technology, whereas in the S&P 500, 17% is tech. You have about 25% consumer discretionary, consumer staple. You have healthcare, so it's a mixture of different industries. Because Nasdaq is more skewed towards a high beta kind of stocks. So if 2 days in a row declining stocks are more than the advancing stocks, then the next week Nasdaq can give you, the IT index can give you a gain of 0.80%. And the third thing he said that if the NYSE declining stocks were at least 2 times the NYSE advancing stocks, मतलब अगर आपके पास NYSE stocks let us say 500 है, if the declining stocks were 2 times more, मतलब दो गुना थे than the advancing stocks, then the S&P 500 gained an average of 0.60% the following week. So what he is again trying to convey is using market breadth as an indicator or a leading indicator, especially the declining stocks, to tell you what can happen in the market the next week. I'll ask you guys, try this out. Leave it a comment later once you've given it a back test of a couple of days or a couple of weeks and see how it works in your respective markets, wherever you're watching it from. So again, concluding these two articles from 2003 and 2005 by Larry Connors, what he told you earlier was if the advanced decline ratio is more than 2, go short. Obviously, after a cluster of evidence is there. If the AD is less than 0.5, you go long because थोड़ा oversold and negatively skewed, मतलब everything is going down, down, down. सारे stock red में आ गए. And he said that hold this for 5 days unless a reversal occurs. And then in the second article, after 2 years, he said, look at the declining stocks. If they are more than the advancing stocks for 2 days consecutively or 3 days consecutively, then the following week of that index will give you an average gain of about 1%. So that can give you good indication कि अगले हफ्ते का trading क्या है, and you can use that mean reversion to make some money based on whatever instruments or strategies that you are using. All right. So now using these two articles as a base, I want to build up on a concept that Larry Connors later discussed on wide range bars. Now, what is a wide range bar? I will do a very good discussion on wide range bars and narrow range bars. And this will be a discussion that will involve another great technical analyst whose name is Toby Grevel. And I think probably it will discuss in the next video. But just giving you a very starting kind of a understanding. Narrow range bar is a body, is a bar having a diminutive real body. Diminutive matlab ho gaya very small, like a doji or like a shooting star ho gaya, for example. Not necessarily, but you can say a spinning top, something like that. That's a narrow body bar or inside bar. However, a wide range bar is, for example, you know what a breakaway gap is? अगर breakaway gap intraday में होगा, that's a wide range bar or a spike or something like a bullish engulfing. That's a wide range, a bar that is unusually long or it is much more bigger than the average bars that are being formed. For example, something what happened on election result was a wide range bar. Something before the election result was a narrow range bar. So there is no hard and fast rule, but a wide range bar generally means that is much more bigger than the average bar that is trading in the market. Okay. When I say wide range bar, obviously this is a terminology of bar charts, but you can obviously understand also from the perspective of candlesticks. देखो पता क्या है, everyone when I say wide range bar thinks about a bullish engulfing. A bullish engulfing is when you have a downtrend, a small red candlestick engulfed by a wide or a very big green candlestick, and everyone says the bullish engulfing ban gaya, now the trend is up. Yes, the trend is up, but the problem is the accuracy of a bullish engulfing is the lowest. I mean, if you look at a high accuracy candlestick, it'll be at, if you look at the plethora of candlesticks, regime, the bullish engulfing, bearish engulfing are actually at the bottom. So question comes, how do you use these wide range bars? यार अगर आप इसको bullish engulfing में buy नहीं कर रहे, bearish engulfing में sell नहीं कर रहे, what kind of strategy can you use when these big bodied bar comes? Because when a big bodied bar comes, that means there's an expansion of volatility. So what should be the next step? It is very common knowledge that, when there is some event, when there is some extraordinary news in a stock, when there is some earnings, for example, koi, let us say FDA का कोई अप्रूवल आ जाता है कोई फार्मा स्टॉक पे, some new product is launched, there is a management change, anything happens and a wide range bar is formed. How do you trade subsequent to that? For example, एक नेगेटिव न्यूज आ गया एंड मार्केट बहुत ज्यादा गिर गया, क्या उसके बाद मुझे बेचना है कि मुझे उसके बाद रिवर्सल प्लान करना है, करना क्या है? सो दैट इज नाउ what Larry Connors also wanted to discuss, kind of building up on the earlier concepts. My suggestion before I go forward is bullish engulfing पे buy, उस पे bearish में sell मत करना. That's the worst kind of way. It's a theoretically beautiful thing, but if you look at the accuracy, I would really suggest you all to read through Thomas Bulkowski's material on chart patterns and candlesticks, and you'll find out it's the ranking in the lowest column. The theoretical knowledge is, I have already said it's the worst, but the theoretical knowledge is if a wide range candlestick, जो आपका body बनता है, like a bullish engulfing, if you are closing above the previous day close and above today open, like a bullish engulfing, then generally the trend will be in the direction of the wide range bar. So maybe आपको 2-3 दिन profit नहीं मिलेगा because the volatility has expanded and then it becomes less, and then later it can expand again. But the trend generally will be in the same direction of the wide range bar, provided you are closing above the previous day close and you are also closing above today's open. Now, the way Larry Connors has suggested is also very beautiful. Read this article. ये 1998 का article है, ये थोड़ा actually पहले I got confused with my numbers and dates. What Larry Connors said is, what I do on the wide range bar. He said, first look for a wide range day in which a stock is experiencing 2 standard deviation decline. The best way for non-mathematicians or basically people who are new to technical analysis, what is a 2 standard deviation? Number one, अगर आपको ये नहीं करना, look for an unusually large bar. अगर करना चाहते हो, look for a Bollinger Band, because in a Bollinger Band you have a 20-day moving average and 2 standard deviation up band, 2 standard deviation down. So you can use Bollinger Band as a very good principle, or otherwise other methods are also available. He said, look for a day or a wide range day in which a stock is experiencing 2 standard deviation decline. एक red bar बना 2 standard deviation का. On the following day, if the opening is a downward gap. So now please understand, this is a setup. In any kind of strategy or in any kind of whatever you use, there has to be a setup and then there has to be an action for signal. मतलब, let us say आप एक triangle को trade कर रहे हो, triangle like a, let's say, symmetrical triangle or a ascending triangle. The formation of the triangle is a setup, and then when the triangle का boundaries are penetrated, that's your action for signal. वहां पे action लेना है. Same thing over here. The setup in this, what Larry Connors is saying is, look for a 2 standard deviation decline. On the following day, you also need a downward opening gap. Decline आया, अगले दिन downward gap है. Then you will place a buy. Buy it. सोचो. Again, try to link it from market breadth perspective of Larry Connors. What did he say earlier? Look for मतलब consecutive days of declines. उसके बाद market reverse करता है. He said, look for a day AD when AD is less than 0.5. Try to combine it over here. मैं आपको 3 articles combine करके ये एक video बना रहा हूँ. On the following day, if it is a downward gap, opening is lower than previous day closing, buy will be placed at the first day closing. समझ रहे हो? ये जो रेड कैंडलस्टिक बना है, अगला दिन यू आर ओपनिंग लोअर. यहां पर कुछ नहीं करना. डोंट बाय राइट नाउ, डोंट पैनिक, बिकॉज यू कैन कंटिन्यू लोअर आल्सो. यू विल बाय व्हेन यू एंटर द क्लोजिंग प्राइस. जब ये क्लोजिंग प्राइस प्रीवियस डे का आप ओपन करके जाओगे, वहां पर बाय करो, एंड योर स्टॉप लॉस विल बी द लो, फर्स्ट डे का जो लो होगा. एज सिंपल एज दैट. If buy is near the previous day low, then obviously give your stock some space because volatility बहुत ज्यादा होगा. Give it some more room. When do you exit? Exit आप करोगे on the same day closing. It's a very quick and fast way to make money. Hopefully, I have tried it on a couple of days. It works very well, provided you follow the setup and all these rules. Either you exit on the same day close, or you will exit on the next day open, provided if your closing is in the top 15, 10-15%. मतलब क्या हो गया? मैं एक बार आपको ड्रॉ करके समझा देता हूं so that things will make sense, and then we can do a couple of examples I've seen on Nifty and small cap index, and you can obviously go through plethora of examples and backtest later. But let us say आपको एक 2 standard deviation का decline बनता है. All right, sorry for my drawing, as I said, it's from my laptop. so I'm not very good at this. And ये एक लो बनता है. Next day your opening gap आपका हो रहा है, you are opening below yesterday's closing. तो yesterday का closing price अगर आप enter करोगे, that is your buy entry. You will go long over there. Your stop loss will be this point, yesterday low. If it is get triggered, you exit. Don't wait too much. You have to exit because a big decline can be followed by another big decline. So we're just looking for mean reversion. Declining is giving us a leading indicator of what can happen in the future. So you will either exit on the close of this day, wherever it goes. But if let us say it is closing within the जो हाई बनता है इसके 10-15% के अंदर क्लोजिंग कर रहा है, तब हम नेक्स्ट डे ओपन पे करेंगे. फॉर एग्जाम्पल, अगर इस तरह का क्लोजिंग है, समथिंग लाइक दिस, इफ यू लुक एट माय चार्ट राइट नाउ, if you are getting a closing like this, then you will exit right on the close. But if you are getting a closing in which आप बिल्कुल हाई के पास बंद कर रहे हो, then try to exit on the next day open, because as I discussed it earlier, if you are closing above previous day close and above the open, you can have a trend in the same direction. So if I can give you certain examples, and I hope it's relatively clear. It's actually a very simple concept also, but thoda sa main, I hope I have done justice explaining Larry Connors. But look at this candle over here. This is back in 24 January. So ये middle Bollinger Band 20 moving average, यहाँ से एक बहुत बड़ा candle बना. So this is 2 standard deviation. And उसके बाद the next candle is an opening gap downwards. But the minute you are entering the yesterday close, you go long, and you can obviously either exit on the same day or exit on the next day open. That's up to you. But you have to exit. You can't keep on. It's not a long-term strategy. You have to exit soon, either on the same day close or on the next day open. And in this case, your stop loss will be on the first day ka low after you enter the closing price of yesterday. Another example which I was actually scouting was in small cap index. Obviously, the more high beta stocks will give you better performance. More volatile stocks will give you better performance in this, obviously, because it is mean reversion. Small cap index over here. I think this is one good example, if I'm not wrong. Yes, over here. ये अगर आप example देखोगे, on this day, 13th of March, you had a 5.5% decline. It's obvious in saying if you go back and look at the advanced decline, it will be heavily oversold, more favoring the declines of that day. It's easily a 2 standard deviation decline. On this day, you can clearly see next day was an opening gap. So when it is entering, आपको long करना है, पिछले दिन के low पे stop loss डाल दो. And obviously now you can clearly see the closing is at the highest. So अगले दिन के open के पास आप निकल सकते हो. So I hope now again, उसके बाद market again नीचे गिर रहा है. So we are not concerned what's the momentum after that. It's a very quick entry, looking at the advanced declines, looking at the market breadth, and I hope this is giving you some clarity. Because होता पता है क्या है? Most of us lose money on these wide range days because we keep on speculating करना क्या? Do we go long? Do we go short? But using this concept of Larry Connors, it can give us some perspective or some kind of a setup to trade after a wide range day. Hopefully, it made sense to you guys. Think about it, and I'll see you soon, guys. Cheers. Bye.